Hi, everyone. Welcome to the Yes Investment Club. This is the first chapter of the basic Yes Investing course, and this chapter will focus on investing for teens. It'll answer the quintessential question of why we as teenagers should start investing early. So, this chapter will entail the following 4 points. First, we'll answer the question why invest. Second, we'll dive deeper into understanding the benefits of investing early. Third, we'll understand the myths regarding investing and trading. And fourth, we'll answer the essential question of can teens trade in stocks? YES stands for the Youth Economic Society, and it is a student led organization that strives to spread financial knowledge amongst the youth of today. And YES can be considered as the one stop shop to improve your knowledge, skills, and competence in managing money effectively. We try to address the three major problems that we currently as teenagers face. And this is summed up in the three facts. The first fact is 75% of high school students say that they are not financially literate. The second fact is three-fourths of the millennials say that they lack knowledge about personal finance and stock market. And the third fact is two in every three high school students fail a basic financial literacy test. So these numbers speak for themselves. And for a solution oriented approach, we at Yes address these problems via our four-step approach. First, we simplify the financial concepts. Second, we give daily and weekly business news updates. Third, we connect professionals and university students to you so that you're aware of what and how they approached their studies as well as their careers. And fourth, we teach investing to students with our well curated and bite sized curriculum. As an organization, we have a mission and vision. So the mission is to financially educate the youth of today and build leaders for tomorrow. And the vision is to empower the youth by developing their financial knowledge and skills that will last for a lifetime. These are our links to the social media handles. You can just scan the Instagram and LinkedIn code to give us a follow.
Okay, to give a short and basic overview of the course that we're going to be following over the next 2 weeks or a few weeks is that the investing course that we have is divided into two segments, the basic course and the advanced course. This is the basic course that we are currently running. And as you know, we're in chapter 1, which is the chapter labeled Investing for Teens. The later chapters in this basic course include talking about the stock market, chapter 3, which is participants, instruments, and regulators, chapter 4, which is stock research and selection, and finally, chapter 5, which is information about the primary and secondary markets.
All right, so let's begin with the first chapter, investing for teens. So there's a lot of benefits to investing for teens, as well as a lot of stigma around it as investing early in the first place. But we're here to clarify a lot of things and tell you all about some of the benefits of investing as a teenager. So the biggest question that you probably have on your minds is why invest at such a young age? So as a teenager, you might feel that money is the last thing you should be thinking about. After all, you're already probably busy with exams, sports, college applications, and social lives. But what if I told you to think from a different perspective? Investing at a young age is like earning money, but for your future. Who does not love a head start, especially when the goal is to achieve wealth? To quote Warren Buffett, the best investment you can make is an investment in yourself. The more you learn, the more you will earn. As you all know, Warren Buffett is probably a world renowned investor, and his advice has helped a lot of people in the first place. So, now let's move on to the reasons you should invest yourself. The first is let your money work for you. It's also a fundamental skill for the rest of your life. Investing can give you quite a head start, and it may help you learn new skills as well. It also helps you start early to increase your gains. And finally, and probably the most important of them all, it helps you learn how to become a better investor.
Okay, so you may ask, what are the benefits of investing? So, firstly, I would like to start with the most fundamental and important quote, which is compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it. And this is said by Albert Einstein. So the first benefit we're going to talk about is the power of compounding. Power of compounding is basically you reinvest the interest that you gain from the principal. So what it's trying to do is making money through your current money, and it allows you to exponentially grow your investments so that you can increase your wealth. So there's a reason the compounding, it's called the eighth wonder of the world. This is because the magic of compounding increases the value of your money over time. And this can only happen and give you huge benefits if you invest early. So as you can see in this graph strictly shows how age plays a factor. So if you can see, Jack started investing at the age of 25, and he only put in the value of $200, and currently he has a value of $96,000 at this point. Then Jill invests the same amount of money, and she started investing at the age of 35, but she only made $72,000. And Joey started investing at the age of 45, and she only made an amount of $48,000, right? So all three of them started at a different age, but ended at the same time duration. And you can see that how $200 can be converted into $96,000 if you start investing early. And this shows that power of compounding is related to time. So time is equal to money. Now, moving on to the second benefit, which is beating inflation. So what is inflation in simple terms or in layman's language? It is an increase in the price of a commodity over a period of time, which reduces the purchasing power of an investor. And it affects the income of the investor so that he or she cannot invest more or cannot have more wealth because he has to adjust to inflation. Right. What the stock market does is, if you invest in the stock market, the stocks, because of the returns that they give, they increase your money that is greater than the rate of increase in inflation. So you're actually beating inflation by investing in the stock market, right? And this again proves that investing early will equal to more saving. So the next, there's a diagram which shows how investing in different types of markets help you beat inflation. So there are 4 different types of markets that you can invest in. Equities, which is actually the stock market. Then there's a mutual fund, which we'll talk about later. Then there's a commodity market, which is gold, and then the real estate market. So these 4 markets show that the inflation is beaten because it is giving more returns higher than the green line, which shows the inflation. So this shows that if you invest, you can beat inflation easily. But if you invest in like the fixed deposits, which people do, which are also called as FDs, it'll not beat inflation, but it'll help you get returns, right? So the basic idea is if you invest in stock markets, it's more beneficial for you. Moving on to the third benefit, which is long-term gains. So we all as investors want to earn money in the long term. So this aspect of investing early helps you gain more long-term value, because if you invest early, you are able to select stocks, learn the investment strategies, and then sell the stock when the value is attained, right? So for long-term gains, you have to apply 2 logics. First one is you have to create a strong portfolio. By that, I mean you have to diversify your portfolio. So your portfolio should not only include auto stocks, it should also include pharma, metals, and retail. And you should select stocks that are stable but are able to grow in the long term. And we'll talk about growth and value investing in the future chapters that we have. So this is basically trying to say that if you invest early, you will have more long-term gains. So again, this is a graph that indicates how long-term gains work. So first of all, the investment that a person has put is rupees 1,000, and he has invested for about 20 years. So the investment value at year 0 is 1,000. and the market value is also 1,000, right? Now, what happens is, if he had not invested the money into the market or any other commodities that help him grow the money would just have been grown to 2,40,000 rupees or dollars, right? But if you invest your money into the market value will turn rupees 1,000 into approximately 10 lakhs, right? Which is 4x the amount of money that you had initially. So within a span of 20 years, you're making 1,000 reap off to 10 lakhs. And that shows why investing early helps you gain long-term returns. And the second last thing that I want to point out is the fourth benefit, which means is you can learn valuable lessons and experiences. This is because young investors have the flexibility and the time to study and learn from the successes and failures. And since investing has a fairly lengthy learning curve, young adults are at an advantage because they have years in their hands and therefore time to study the markets and refine their investing strategies. And the most important point to mention over here is you as a student have lower stakes and money at risk, right? So you're technically investing for learning and then applying that learning when you grow old. So the last benefit of investing early is you achieve financial freedom earlier. So you learn the money management skills at a young age. Your experience will help you grow faster than others, and you'll already have the knowledge and the skills that you require to manage your money. So you'll become financially independent. So one true statistics or survey that was conducted was like out of 100 millionaires that were surveyed, it was found out that 62% of them did not get rich only because of their incomes. They invested in many different types of assets as well, right? So this says that if you start investing early, you will understand where to invest your money, and then you can achieve financial freedom earlier.
Now we're going to be talking about some of the very common myths that people have about investing and trading, which causes them to not get into investing and trading. And so number one is that investment in stocks are very risky. And number two is that you need to have a very strong knowledge of finance in order to start investing. And number three is that a lot of money is required for investing. And these myths and others have led people to not get into trading. And as of December 2021, only 7.7 crore people out of 138 crore people in India trade. And we're here to help you to learn more about investing so you can invest and trade better.
So, of course, right now, the question on everybody's mind is, can teens invest in stocks? The short answer is absolutely yes. SEBI, which is the Security and Exchange Board of India, has said that a trading account can be open for minors and teenagers like yourselves. However, the account will be operated by a guardian till the minor becomes of a legal age. And this means the minor cannot directly buy or sell any securities, especially stock. Instead, they will have to acquire the approval of a guardian to do these things. However, the advantage that you have in this is that the minor's trading account can be continued when the minor becomes a legal adult or 18 plus. Hence, all the profits that you gain during your time trading now will remain with you later when you reach the age of maturity.
Great. So this was all for chapter 1. Thank you.